Welcome to the Startup Grind.
So I'm going to hand you the mic, and we're going to go back a little bit. I want you to first just go back and tell me what your father did, tell me what your mother did, what your education was, and give me a little bit of background.
Okay, well, I guess thanks for the opportunity and the last minute call up. It's I guess convenient that I actually have my desk only 10 metres away, so I guess you'll have to just listen to me talk tonight. In terms of, I guess, my background, so I come from quite humble beginnings. I grew up in a town called Stawell. How many people here know where Stawell is? Wow, that's more than I expected, because the population of Stawell is actually less than the population of the Rialto building, which is just behind us, on a daily basis. So 7,500 odd people. Mining town. Maybe that's where the DNA of entrepreneurs actually comes from. I don't really know, but in terms of my background as to my parents, I had a father who worked in what was called the State Electricity Commission of Victoria, which is now being changed to Powercor, or one of the electricity companies.
My wife works for Kauffman.
Okay, so he was involved in all the corporatisation of that company and travelled quite a lot, but then decided that he had enough of the corporate world and was going to go out on his own. So he started in 1991 an IT consulting business and took himself back to university, studied up, and then launched the business. And I guess that's where I got my first start in the entrepreneurial world, by working with him. So in 1991, I was in year 7, so I was starting high school, but in my spare time I was playing computer games, and in my other spare time I was helping him to put together the old IBM PCs and piece together Novell networks, if you also remember those, Windows for Work groups, networks, that type of thing. How the world has changed, and we've now got a 100 megabit connection symmetrical into this place, all of it running wireless, whereas back then it was all about Ethernet and Cat5 cables running around everywhere. Mum just ran around after the kids, so I guess I did get a lot of support as a youngster. My little boy dream, though, was actually to be a pilot. So, my first toy was a Tonka Learjet, which made many a crash landing. And as I got to be more adept at, navigating fences and roofs and houses and stuff, the test flights managed to get higher and higher. I actually still have that Tonka Learjet, and it actually sits on my TV cabinet. So it's funny what inspires you when you're young, and then what continues to inspire you throughout your life. So I was very focused on being a fast jet pilot, and this actually predates Top Gun. I really focused myself in and around how I can actually achieve that goal of going and joining the Air Force. So I did my VCE studies. I was also quite successful in a number of areas of sporting pursuit. And I think what sport taught me, which I've also carried into my entrepreneurial career, is discipline and the benefit of hard work. If you train really hard for something and then you essentially go and compete and then you reflect, there's an enormous amount that you can actually learn from that. And as you get into the higher levels of, competitive swimming, cycling and triathlon, as I did, the battle with yourself, the self-discipline that was required to get out of bed in the morning at sort of, with 4 o'clock, or 4 o'clock being on the clock, so to speak. It is a battle with yourself, and certainly being an entrepreneur, as a lot of you will find or probably are experiencing, is quite a lonely game, and as a result, it's your own will and self-determination which really drives you forward.
Can I hold you there for 1 minute, because sorry, I just want to Quentin Tarantino it for a minute. Just to give you a background, sorry, I should have done this at the beginning. Venture capital, gives capital to businesses. What you have about maybe invested in about 10 or so businesses here.
Yep.
And they own the building. So that's just a little bit of background. Sorry, I just wanted to make sure.
Sure, no problems at all. So as I was saying, entrepreneurship is a lonely game, but I guess by having a space such as the York Butter Factory, that game becomes a little less lonely, and there is more and more people now. As you look around this room, that you can actually share that journey with, and I think that that's also very, very important. So to continue my story, so I did well at school as well, which was lucky. I managed to get myself into the Air Force and also into the Australian Defence Force Academy in Canberra. So I left country Victoria and headed off to Canberra, and I thought I was well on my way to becoming a pilot. The Defence Force Academy is an interesting environment. It's I guess it's an environment whereby you put Army, Navy, and Air Force officer cadets all in one place for a 3-year or 4-year degree, and then you subject them to probably as much stress as you possibly can. Being smart people, you obviously then work out ways in which how to exist within that system, and how to I guess thrive within what is a military environment and somewhat of an archaic environment as well. Unfortunately, whilst I was there, I did end up getting injured in my 3rd year. So I'd done 3 years of a 4-year Bachelor of Aerospace Engineering, and unfortunately was faced with the prospect of not being able to pursue my dream of being a fast jet pilot through injury. That, I must say, was probably, one of my first stumbles, or I guess the requirement for my first personal pivot, whereby effectively I had to actually reassess ultimately that my little boy dream wasn't going to come off, that my perfect vision that I'd pursued and worked for what, the best part of probably 10 years wasn't going to happen. And I guess if I put myself in the government shoes, should you be investing millions of dollars in training a fast jet pilot if this person's possibly not going to be able to be a pilot ultimately? The more stressful part of that for me was that I actually moved through a period of rehabilitation, and that rehabilitation saw me bounce back and forth between being permanently medically unfit and then temporarily medically unfit. That's probably the worst thing that I could actually wish upon anybody, as essentially it's like a carrot being dangled in front of you that it's going to be okay. No, it's not. It's going to be okay. And ultimately, we had to pull the circuit breaker on that. And I actually I left the Air Force and had to work out what I was going to do next.
Was that leg, back?
Back injury, actually. So yeah, so it was part of something called Leadership Challenge 3, which was effectively we went out into the mountains just outside of Canberra, and we created, I guess, a situation of arduous conditions. So raining, lovely weather, as Canberra tends to do on the odd occasion about this time of year. And we got the ability to carry things like tank tracks and helicopter rollerblades up and down hills and do exciting little challenges along the way. Unfortunately, in this case, I, being a bigger guy, also got the privilege of carrying things like the radio and other bits and pieces, which ultimately didn't work in my favour. But anyway, I guess the benefit of that experience and the necessity that life doesn't always go as you plan it, and the ability to recover, the ability to pick yourself up and carry on, is probably one of the best skills that you can learn. And I think that actually starts to play out in the startup world, where people say that you need to iterate. And I guess iteration is a form of testing. It's a form of, I guess, learning in some ways how to fail. Some things are bigger failures than others, but it's what you actually learn again that really makes all of the difference. So here I am. I'm age 22, I think it was, and what else would I do? But essentially, I thought I could start a consulting company. I don't know why I thought that I could start a consulting company, but I had offers from consulting companies to go and work with them. So I thought I'd go the next step and actually start my own consulting company. Initially, I actually consulted back to the Department of Defence as an individual, and then from there very quickly identified a significant number of opportunities. This was about 2002 when this happened, and not too long after I actually started this business, unfortunately September 11 happened. And what that meant was that I guess all the systems that are now being identified through PRISM and our friend Edward Snowden's requirements and what would you call them? Revelations, they were starting to be established and utilised, and obviously the war on terror and the likes really started to ramp up. So I had the ability to work within a defence environment and to grow out a very successful consulting company. That consulting company grew triple digits year on year, so over 100% for 7 years straight. But then I guess what I found was, as I grew this company out and did some quite interesting things, from covering off on satellite systems to command and control systems, to working with New South Wales Police Force for a mobile forensics testing capability, that I guess we could create and deliver amazing projects, but as a professional services company, I felt that ultimately that value wasn't being created on a sustainable basis. And that's really where the realisation and my current, I guess, line of work really came into being. I wanted to create sustainable value. I didn't want to deliver a project which delivered capability, brought it into service, only to hand it over and then to see the value, I guess, disappear. I wanted to see the value and the potential fully realised. And I guess that's where I found that venture capital was a perfect example and perfect fit for my skills and my passion for technology, my passion for innovation, my passion for entrepreneurship in terms of creating something from nothing, from building something, from helping people to actually achieve significant things through what were high stakes and complex projects.
Where does the Stanford Business School fit in?
So Stanford Business School. So by the time 2005 rolled around, I'd finished my aerospace engineering degree. I'd taken 6 months break, then straight back into a Masters of Engineering Science and Management, and then moved on a year later to do my executive MBA. 5 years after that, I actually took a sabbatical, and that's where I studied the Stanford Executive Program. So Stanford has a number of different MBA and senior executive programs. The one that I did was the post-MBA program, or their flagship program called the Stanford Executive Program.
It seems to me that a lot of the top dogs, there's always this connection to Stanford. So there must have been some great networking opportunities that happened as a result of that education.
Absolutely spectacular. I had the privilege of addressing one of the larger, university groups about 2 months ago, I guess it was. And I said to the group, as a group of graduates, if you ever have the opportunity to go and study at Stanford, do it. And I guess caveat that and to say, if you have any interest in any form of technology and entrepreneurship and innovation, then it's somewhat like Mecca. It is really where the epicenter of activity happens. And you're also, I'm sure, all familiar with the level of, investment that also occurs there, and obviously the number of success stories which are obviously being released in TechCrunch and every other media outlet at this point in time.
So just to give you an overview, because I've been looking into this for myself, it's about 70 grand, it's about 8 weeks. I don't know how much it was when you do it, but this is what it is at the moment. So definitely well worth, if you've got the money and or you got your company willing to pay for it. Everyone's at Stanford, right?
Well, yeah. I guess one of the challenging things around Stanford is actually the admissions process.
Oh, sorry. Yeah. You can't just buy your way in.
Yeah.
But if all right, forget it.
Yeah. So anyway, to give you context as to essentially the people that study and complete the Stanford Executive Program, I had the opportunity to be lectured to by the likes of Carlos Ghosn, who's the CEO of Renault Nissan. People like Richard Krajicek, he was the CEO of Wells Fargo. Andy Grove from Intel. We were also lectured by both George Shultz and by Condoleezza Rice, so 2 former heads of state of the United States. So, but what was better was not the faculty which actually delivered the course, but it was more so the colleagues that I had the privilege of actually working with. So the now CEO of SanDisk, so I think they're worth a lazy $15 million. So Sanjay Mehrotra is one of the founders, and now he is the CEO. So he was part of the group. Another one is now the CEO of Granite Construction, which is the second largest construction firm in the United States. And then somebody called Safwan Shah, who did started off as a NASA rocket scientist and then decided to become an IT entrepreneur. Did a small company called Infonox, which delivered payment systems to about 98% of the world's casinos, amongst hundreds of thousands of other vendors on a global basis. And I guess through that also has recently become one of our partners in Adventure Capital. But it's the quality of people and I guess that network that you get from undertaking a course at a place like Stanford, which is absolutely second to none.
Okay, so you got you made a lot of money, I'm guessing, with these government contracts. Yeah. You thought venture capital was a new direction for you. You were interested in it. You love technology. That you've kind of funded that business yourself from the money you made.
Yep.
And then you already had these ties to Silicon Valley that could help bring you some real money behind it, right?
Yeah, absolutely. So when I was working within the the government environment, I did have the opportunity to work with a number of Silicon Valley-based companies who were expanding themselves into Australia. And one of those who I identify as a mentor is a guy by the name of Tom Mendoza, who is the vice chairman of a company called NetApp. And for some of you, you may know of NetApp, but what they do is they create, information storage systems. And they were very, very successful. And I had the privilege of sitting down with Tom, and where I actually got the inspiration to go to Stanford was from Tom. And Tom said, I said, Tom, one day you're sitting there, you're a quite, impressive sales manager, but next thing you know, you're a president of a NASDAQ listed company. What changed? And he pointed me directly to the Stanford executive program as one of those things. And I guess through that you start to build networks, and it's amazing what a network can do when you need it to.
So take me to the start of Adventure Capital. Was this Adventure Capital at this stage? Or was it called something else?
Adventure Capital initially was my own personal investment vehicle. Yep. So yeah.
Can you take me from there and then through to the journey today and
Yeah, so for me, Stanford was very much about taking me to the next level in terms of my career. So I was age 30 by now, so one of the youngest people to complete the Stanford executive program. And I'd set myself up such that completing the Stanford course was going to take me from being able to operate, very, well here in Australia and around Australia in terms of its allies, but then to actually get into the global markets. And I guess that's really what Stanford enabled me to do. So I came back to Australia after completing Stanford and really started to execute with that network and with that next level of perspective and operate at a global level. So as part of that, I hadn't really worked within the emerging economy. So I spent a little bit of time working in places like Papua New Guinea. And that was absolutely an eye-opener, working with Digicel there as one of the larger telcos. And for those of you who haven't been there or haven't heard some stories, then it's pretty wild in places like Port Moresby. And some of the advice that I got given was, if you get yourself into trouble, just give them mobile phone prepaid cards. It's like, so what? That's better than money? It's like, it's definitely better than money. And the other one, which was really imprinted on my mind, is that I actually arrived in Port Moresby at the airport, and as I effectively grabbed my bags and went to walk out, it's like, oh, hang on a second, sir, we're just going to bring the car around. And the car consisted of a car in front with armed guards, a car behind with armed guards, and you in a car in the middle. It's like, I don't think I'm really that special. It's like, it's not about being special, it's about you being safe and us not having to deal with the problem that you getting killed. So that really made me feel quite on edge, I guess. And but it was a tremendous experience. So from working there in Papua New Guinea in a very tribal and unsophisticated space, to working in other places where essentially life was also cheap, places like the Middle East and other places. where you could actually sort of see that there was immense wealth, but then there was also immense poverty only 100 metres away. So, so in terms of the transition from there, I actually really had the passion already burning in me as to to take the next steps, to actually take and set up an infrastructure similar in some ways to the Silicon Valley that could support innovation and Australian originated innovation and its ability to be exported to the world. And I'm sure I don't need to tell many of you, but Australia is a highly educated nation. Where I think number 2 in the world for scientific publications and number 3 in the world per capita for the number of patents we actually produce. What we are really poor at though is actually commercialising this research. And I guess that's really what I set about doing with the establishment of, first of all, Adventure Capital as an early stage technology venture firm, and then more broadly, what we've also done is built an ecosystem around that to help to actually accelerate and support entrepreneurs as they transition from having entrepreneurial curiosity to start to actually exercise that entrepreneurial curiosity and explore it. And then from I guess, using things like hackathons or startup weekends, that type of thing, that we can then transition you into an environment like this, which is the York Butter Factory. So the York Butter Factory is a co-working space for high potential seed stage and concept stage businesses. So we've got in excess of 70 startups here that are now resident. Some of them are full-time, some of them are part-time. And we actually sort of, I guess, create an environment whereby there's a lot of collaboration which occurs. And through that collaboration, a lot of peer-level collaboration, you have the ability to actually share your entrepreneurial journey, but equally, you can actually, I guess, really pull each other up. So it's like, when you hit that brick wall, when you think that maybe you can't actually break through, then you also can actually just, sit back in your chair, push back from the desk, and actually look around. And as you can see here, there's probably going to be a few people that'll probably either A, notice that you've just done that, or B, that you can actually engage with and actually start to talk about the challenge that you might be facing.
Can I stop you there for a minute? Because York is like, I hold office here one day a week if I can make it down here. But how important this building is, just an understanding to everyone about what you consider beneficial to the ecosystem. You touched on hackathons. I think events is a big part of that. So can you just talk about the ecosystem and then co-working in relation to the ecosystem? Because you were pretty much one of the pioneers in Australia, right? This must have been the first co-working space in Melbourne?
No, it certainly wasn't the first, but I guess what we've done is, we've taken a specific approach to the establishment of it. So, we've taken a slice, of the entrepreneurial community to attract, rather than a generalist view of essentially...
Like a tech-focused.
A tech-focused, yeah. Tech and entrepreneur. So, we weren't looking to bring in purely freelancers. We weren't looking to compete with, the desk for... Yeah, the desk for hire, the likes of the Regises or those sorts of guys where you've got a serviced office.
Yeah.
We were specifically targeting the creation of a community which had high performance characteristics and collaboration, which was actually going to drive the creation of significant opportunities and really creation of significant economic development outcomes. So that's really what we've been able to do here. So the York Butter Factory has been open now since October of 2011, and working with a number of people, including my business partner Darcy Norton, who we'd hoped actually to have on this chair tonight, but we'll have to save up for another time. And also one of my first investors, who was Lorenz Grollo, who saw a significant opportunity, and the Grollo family actually half owns this particular building as well. So that's been a fantastic partnership that we've been able to pull together, and we're certainly doing our part to gentrify King Street and obviously, the key thing that we're really trying to do here is to advance entrepreneurship in Victoria, in Melbourne, in Australia, and see that more of the that entrepreneurial potential is realised on a global scale. So, what do we mean by that? It's about making billion-dollar businesses. They're the ones that are going to make the difference.
And was that a strategy by yourself to try and imitate what you were seeing in the US, and to really have let's put entrepreneurs in here, let's get them, let's incubate them, let's have events, let's try and recreate that ecosystem that was that's booming and world famous in Silicon Valley?
Yeah, look, I guess we definitely took inspiration from the Silicon Valley. We took inspiration from other innovation locations like Israel, where effectively there's obviously some preconditions as to why entrepreneurship is so I guess vibrant in those spaces. And a lot of it has to actually do with the fact that as I guess an entrepreneur, if you've got no choice but to deliver something big, then the chances of you delivering something big are obviously much greater. The challenge we've got as Australians is we're a little bit lazy. And we're a little bit lazy because we live in quite I guess stable economic times. The GFC came, it went. It was definitely harder maybe than it was prior to essentially September of 2008. But really, we've been enjoying probably 20 years of economic prosperity, and that's now preconditioned us as to essentially having expectations that it's just going to continue. I guess my bet on a macro level is that it's not going to just simply continue, and that innovation and essentially the main lever that we can bring to bear around innovation and productivity is the fact that we can actually start to leverage up the intellectual capacity and human capital that we have here in Australia, and stop just simply digging stuff up out of the ground, not even enriching it in any way, shape or form, but actually shipping it offshore as raw materials. And I think that you look at any of the mining companies right now, and the contracts that they're now starting to write, they're all getting shorter. The prices that they're willing to pay are all coming down. And you can directly match that against the fact that commodities in general are also coming down in terms of their pricing. So what does that mean? That means that companies are going to have to get smarter. And that intelligence is essentially going to take some time to actually work its way into corporate Australia. But I don't think it's going to be that long before we do see that essentially there's going to be a slowing down of the mining economy, the resources economy, and that's going to flow through to I guess the white collar society, and as a result we're going to need to commercialise a lot more of this human capital and intellectual property that we've got stored up here.
So you started venture capital, you opened the York Butter Factory. Was that after you've made investments in a few technology companies and then wanted to bring them in-house, or was it the other way around? And then can you run through some of those early investments? And for example, I just keep thinking about 121 cars being featured on Angel List for the last couple of days. Some of those success stories.
Yeah, for sure. So we started investing in early 2011 after making the decision that essentially we were going to establish a fund rather than just invest within our own personal means. Through that process, I'd basically had the privilege of bringing on board Darcy Norton, as I mentioned before, as my business partner, and I guess we've really started to escalate from there. In terms of the businesses that we've invested in, we were fortunate enough to close 2012 with a very, very strong portfolio. So by the end of last year, we were able to host a world leader, independently rated, called Oomph. Previously called Mo Generation, which is in the tablet publishing space, so independently rated by McPheeters as the #1 in the world, beating the likes of Adobe and Woodwind and others. We had BrandScreen as an Asian leading company in the basically demand side platform business or real-time bidding. So most of you may be familiar that online ads are actually traded just like stocks on the stock exchange. And in effect, it's like a high-frequency trading platform. And this one's specifically set up so that you can optimise your return on investment. So if you're looking to get into an audience which has particular characteristics, the BrandScreen Cortex platform enables you to actually better target and better connect with the audience that you're looking for. We also have 3 companies which we believe are Australian leaders or in their categories. And then we have companies that we believe are technology breakouts, one of which is One-to-One Cast, which they're responsible for SoundGecko as a lead-in product, and will soon deliver a fully personalised radio station called Aloud. And I think we're 47 days out from that launch, so certainly keep an eye on it. But in between, definitely if you've got an iPhone or a mobile phone, smartphone in general, download SoundGecko and get a taste for what they've got. The other company that we're very proud of that's still currently located downstairs here in the York Butter Factory is a company called Axiflux. And that really sort of plays back into my original sort of degree training in aerospace engineering. It's actually an electrical motor, an electrical drive technology. And that technology is actually addressing the challenge where electric motors really haven't changed for over 180 years. So, the same electric motors that you probably used in year 7, where you essentially got the magnets and the coil and you sort of made it spin, and then essentially the light globe, it shone brightly. Vice versa, you replaced the light globe with the battery, and magically the rotor spun. We've not really got a whole lot more sophisticated than that. And what Axiflux has done is actually completely turned that paradigm on its head and enabled the technology that we now put into things like plasma screen TVs or any number of other devices such as smartphones to be basically embedded into motors and to use that technology to control and deliver significant improvements in performance across a number of different characteristics.
Can I ask, because I know a lot of guys are starting out or they've got their own business and stuff, can you run through some of the, you kind of touched on everything, but if we can use One-to-One Cast as an example, people in the audience, for example, they've come to you with the idea. Now they're like, I know that they were in Optus 8. Can you run through the process of, they come to you, you gave them a little bit of money, they're working on it, now they've done this and we helped them, go meet with the Optus 8 guys, now they raise another 250 grand, now they're featured on Angel List, we've got investors knocking on the door. Just go through the process of a successful startup journey, I guess, for these guys.
Yeah, for sure. So, for those of you who are, interested in some of the heritage of this space, given that it's 158 years old, in March last year, in this room right behind you, the first office here behind the stairs, we had the team from One-to-One Cast actually come and pitch us an idea which was called Loku, and Loku was all about delivering a personalised radio experience. At that stage, essentially, it was two co-founders who had some level of entrepreneurial success previously, but actually hadn't gone through the process yet of building anything. And for us, this was actually quite an interesting prospect. We before this only wanted to invest in companies which actually had built something and actually had achieved something. So between Darcy and I, we essentially said we think that there is really something here with their concept. They seem to deeply understand the dynamics of the opportunity, and that there was a clear problem to solve. They basically wanted to capitalise on people's commuting time, and that time when effectively you can't actually be reading, the information that's being delivered to you on your handheld device. So times when you're essentially walking, times when you're essentially driving. They wanted to own that 53 minutes as they'd identified it of people's commute time on a daily basis. So we negotiated with them as to essentially incubating them. We've only ever done one incubation, and it is the One-to-One Cast guys. Approximately 4 months later, in August of last year, they launched the SoundGecko application, which was effectively a lead-in product, a minimum viable product, as most of you have probably heard about. And that minimum viable product was a huge success in terms of its uptake.
Can I just talk about that product, because I use it almost every day, so I have to plug it here for a minute. If you guys, like me, you come across these great blog posts all the time and you don't have enough time to read them, you simply add this SoundGecko to your Chrome bar, what's it called? Yeah.
Yep.
Your extension, and you just literally drop any page in there and it converts it into an audio file, and then you have a playlist on your phone and you can just listen to any website, any page, anytime you want. So yeah, I use this all the time.
Same. So, I guess, a lot of people are, thinking about entrepreneurial opportunities. You want to find entrepreneurial opportunities which are able to actually tackle people's daily habits and to essentially be able to actually identify something which you can stick in terms of how do you get them to use it the first time, and then how do you get them to use it perpetually from then on. And I guess, Chris is a classic example here whereby, he can't live without SoundGecko. He needs to have that ability to actually listen to his articles, because otherwise he doesn't get the opportunity to consume that information. So anyway, they were very successful, and they got a lot of coverage. So The Verge picked them up, TechCrunch picked them up. The whole sort of startup success story started to unfold. But the key thing was, this was only their minimum viable product, and this was only a fraction of the vision that they actually wanted to deliver. So what we had to do as essentially as a board, as essentially an advisor, and they had to as entrepreneurs, was to actually chart a way forward for them to actually, continue to support their customers, to continue to learn from those customers, and to advance the product. But equally, they still had their big vision that they're still, today, working to deliver. So that's been a massive learning experience for these guys. So through the success of essentially the launch of SoundGecko, Adventure Capital as a fund then did the lead investment into these guys, and not too long thereafter they were actually selected as part of the Singtel Optus Innovate seed program as well, and they were effectively one of two companies, both of which came out of Melbourne, who were successful last year. So Venue Mob is the other company that was successful. We also co-invested again with Singtel to continue to accelerate that company, through to its current position now.
Sorry, so that was, just for the audience reference, that was what, 200 grand came from Optus, and then.
Yep. And so we'd already invested once, and then we essentially topped up the round, and then have since also continued to invest in the business as it's.
So this is in a matter of what, 6 months? They've gone from concept, minimum viable product, TechCrunch, press coverage, raised considerable amount of money, and they're still like, I've seen that aloud, it looks like it's a brilliant product too.
Yeah.
So just up and away.
Yeah, absolutely. So they started off as 3 founders, and now they've got a team of 10 that are working on this, and they're getting significant interest from US-based VCs, and also from other corporate venturing arms as well. So companies similar to the likes of Singtel's Innovate arm.
Can I ask you what for these guys here, and like we kind of did this last time, we had Jordan Green from Melbourne Ames. What are you looking for? If these guys are trying to get their business plans together or their minimum viable products for them, what are you looking for? What's going to tick all the boxes for you? Yeah,
for sure. So look, the commodity for us is effectively the ability to undertake an MBA style analysis of your business plan. That's effectively, in the venture capital world, as far as I'm concerned, a commodity-based activity. What we're looking for is really a very strong founding team DNA, where effectively the founders come together and you can see very clearly that they're going to be able to deliver something special, something extraordinary. And they do that not as individuals, but actually as a team. And I guess that's where people talk about the X factor. People talk about what are the key attributes that are associated with companies. But for us, the most successful indicator we've found is definitely that founding team DNA, where each of those founding members actually complements one another. So for us, we're an early stage technology investor. So what do? We look for early stage technology opportunities. So non-tech founders coming and pitching us, digital media ideas, but not having any technology. That's really not a good recipe for success with pitching us. So you really need to have that complementary skill set between both the tech founder and the non-tech founder, if you will. So that's certainly a key piece of the puzzle for us. For us, we're also looking for people that we can really make a difference to. So we've got quite a strong partner group, which covers both here in Melbourne, but also in the Silicon Valley. So our chairman's a gentleman by the name of David Scott Harlig. He was a co-founder of a small company called DoubleClick, which you might have heard of, and if you haven't heard of them, you can probably find them contributing to Google's balance sheet on an annual basis, or quarter by quarter basis is probably where you can identify that. But he's actually a very big champion of Australian entrepreneurship, and has been working with us for a number of years. But each person within the venture capital team comes with a number of strengths, and we look for opportunities where we can really, leverage up our strength to accelerate your business into global markets. If you come to us with an idea which is only applicable here to Australia, once again, being 2% of the world economy on a good day, and probably shrinking a little bit, it's not probably going to be the style of idea that we get in behind. We've obviously already had significant successes in the likes of your car sales, your SICK, your REA, which are trading on the stock exchange now for not far short of $10 billion. We've had our ResMeds and our Cochlears, all those sorts of guys, which have been massive successes on a global basis. And we've got a huge swage of companies. Your Atlassians, your Aconnexes, your 99 Designs, you've got Big Commerce. We've got a lot of talent here in Australia, which is now starting to, despite the absolute, desert of venture capital, that regardless of that, we're able to actually deliver something and punch a lot harder and, well and truly above our weight on a global stage.
So would you look at guys with just like at idea stage, or you want to already see that validation and some traction already?
Yeah, look, for us, we because we invest in the people, we're looking to essentially build a relationship over a period of time. So I guess that if you've just got an idea, then coming and working in a place like the York Butter Factory gives us the ability to actually work with you and see you working on your good days, your bad days, and those days in between. And I guess what that also builds is a level of confidence for us about how you work, how you actually deal with those problems, how you deal with people, how you create a movement. Because that's really what you're doing here, because entrepreneurship is truly about creating something which is greater than yourself. So you're not going to be able to do it by yourself, so how do you lead people, or how does your leadership inspire others to take that extra 10 steps that you need to take, even though it looks like it's going to be futile. So that's the sort of thing that I guess we would support and see very favourably as we look at opportunities. I also talk in terms of the founding team's DNA. If you're going to go and chase an idea in, say, rockets, make sure you've got experience in rockets, or you're able to actually acquire the skills that you need to actually really tackle that marketplace. So maybe you personally don't have those skills, but your business partner desperately needs to in order to form that balanced team. So certainly think about the opportunities that you're going to chase, and how you're actually going to actually, first of all, understand the market, but not only just understand the market that you're tackling, but how do you actually network within that market? So do you have the professional network to actually have credibility when you come to that market with a different idea?
This happens the first time it's ever happened. Anyway, if everyone can still hear us. Hello, here we go, perfect. So venture capital's had a few big runs on the board, if I could put it that way. Now, how I guess bigger VC firms in the US and globally must be starting to pay attention to you.
Yeah, I guess our position now, as I guess have built out quite a high quality portfolio, which is performing very strongly and getting follow-on investment from global VCs. We're in a position now where we can actually start to act as somewhat of a feeder fund for leading investments as they go global. And our two sort of focus areas are businesses which are looking to go global into Asia and also into the United States, as that's where we see significant opportunities.
I'm going to open up to a few questions now. Anyone got some questions for Stuart? Yep.
I'm just curious why you wouldn't go into the UK market. Or is that something in the future?
I guess it's a matter of time is one thing. So a 20-odd hour plane ride versus an 8 to 12-hour plane ride is definitely part of it. Time zones as well. So if you commit to the United States time zone, then it's very difficult to commit also to a UK time zone as well. Whereas essentially Asia in a lot of ways overlaps. And I guess the other one is just that networks, as I sort of said. My networks aren't anywhere near as strong in Europe as they are in Asia and also the United States.
Can you tell me a little bit about these connections to Asia? It was quite obvious that you have these connections to, through Stanford with Silicon Valley. Can you talk about the relationship you have there with Asia and what your plans are there, tackling such a massive market?
Yeah. So in terms of, I guess, my Stanford network, it's not just simply in the United States. Obviously, my cohort were largely from the United States, but they were from all over the world. And as part of that, I guess, program, I walked away with essentially a massive, I guess, increase to my network. So I've got people on the ground in Hong Kong, in Singapore, in China. Pretty much anywhere where I'd want to look to put a business. And as essentially businesses look to identify their market entry strategies, we're able to actually connect them directly in to capability on the ground to understand, are they planning with, I guess, an accurate understanding of what the market is doing, or are they just simply guessing? And if they're guessing, how do we actually create, I guess, a greater level of fidelity around those guesses so that we don't simply just waste enormous amounts of money as you look to enter the market?
To bring that back to your portfolio, how would you look at like a strategy for a one-to-one cast? Is that a result of an immense amount of research, or is that just translating the app?
In terms of, I guess, the translation's obviously an interesting one. Cultural barriers are an interesting one. But if we look at, say, specifically one-to-one cast, we look to Singtel Innovate as a significant partner in that growth. So part of the reason why we heavily supported Singtel joining the cap table and joining as a strategic investor was the fact that they've got somewhere in the vicinity of 465 million mobile phone subscribers across Asia. And we wanted them as a distribution channel. And fundamentally, if you're looking to create a business, then ultimately growth is going to come from your ability to create and to grow out distribution channels. And as venture-funded businesses, you're looking to get big distribution channels opened up. So that's really how we look at it.
So Singtel owns Optus.
Owns 100% of Optus, and they also have a corporate venturing arm called Innovate.
Okay, and then is it? I've always been interested to see how this works. If you're getting that, is it literally like sending out a push notification to 20 million users at one time? I don't know how are these guys making use of that network that directly helps the one-to-one guys? Yeah,
well, I guess it's. I wish it was as easy as simply sending out a push notification to 20 million odd people. But what it is that you've also got to overcome the inertia of those organisations. They've got internal processes, internal ways in which they do things. How do you actually harmonise an upstart, fast-moving and agile business to deliver something which is going to be valuable to an enterprise class client and their clientele? So there's a lot of complexity that you do need to go to. So it's not as simple as, hey, we just connect the dots and like Lego, it just works and it snaps together. There's an enormous amount of I guess, hard work in actually bringing those partnerships together. And even when the partnerships do start off, they always start off small. So they're only going to trial on a small number of their customers. because they're conservative in nature. So how do you actually, I guess, set in place a program which enables you to escalate that progressively over time? So, if you've got a startup and you want to work with a larger business because you can see opportunity, you need to understand that it's going to take you not just simply the Lego connection sort of story, but it's actually going to be a lot of hard work. And then the other problem with working with big companies is that they change. They change all the time. Every 12 to 18, 24 months, they'll do a restructure on you. Or the person that you're working with and who loves your product, they'll look to potentially move on. So, this is where you really need to think through the strategic selling aspects of what you're doing to make sure that you're really embedding the product in the right way.
Is that something that you drive? Do you guys go to the Sing Tool guys and go, look, what have you thought of this? We can maybe roll out something, in this particular way, or? It
really depends upon the entrepreneur that we're dealing with. We would hope that the entrepreneur is, very well equipped to actually to do it themselves. But I guess what we do is we supplement that or essentially help to essentially, I guess, shape it for best effect.
Nice.
Just on that, was there any structural changes that happened in that company as it developed a close relationship with Optus?
I don't believe that the company's changed in terms of its internal, I guess, machinations. I think that its DNA still is very much intact, and it's been able to actually expand quite well. And so a culture of an organisation is very critical, because you're not asking people to do ordinary things. You're actually asking them to go to that next level and really sort of deliver a lot more. But I think to your question, do companies have to change in order to essentially engage with these companies? And the answer is sometimes yes. That could be the expectation. So, it's a double-edged sword in terms of grabbing the highest rung up on that ladder. You need to understand what grabbing a hold of that rung actually means for your organisation. And in some ways, you may find that a smaller partner and maybe a slightly slower scaling may be better for you and more sustainable, because the expectations of larger companies are always greater than that of smaller companies in terms of process, procedure, appetite for risk, that type of thing.
Chris. Stuart, I know that there's a lot of people out there seeking venture capital at the moment, and you guys get to see a lot of pitches. I know you've probably got a book open at the moment. Could you give people a sense of what the real difficult challenges are in actually getting funded, and what they can do in advance of having a conversation with you to actually set up for giving it the best shot possible? Yeah.
I guess in terms of, the first step is probably to get a meeting with a venture capitalist. And I guess the best way to do that is to actually do that through networks. So find somebody that we know, find somebody that we've invested in, tell them your story, and effectively, I guess, in that way, they're actually going to essentially communicate your value proposition through to us and say, I think you should meet Joe, or I think you should meet One-to-One Cast. These guys are really onto something. So that's probably I guess a hack that you can use, rather than just simply sending us an email. Some people just simply think that that the process is I develop my business plan, or I simply even write an email and say, I've got this awesome idea, I'd love to talk to you about it, but I can't tell you about it until you sign my NDA. That's probably almost an instant recipe for almost no response whatsoever. A venture capitalist will not sign your NDA. And the reason is that we're seeing 2, 3, or more deals every day. If we sign off on those NDAs, or even half of them, or even 10% of them, the liability to us and our investors and our portfolios is absolutely massive. But I guess my job is not to take your ideas and essentially deliver them. My job is to find the best entrepreneurs and to work with them to actually see that their massive vision, their global vision, is realised.
I've got a question on the fund that you put out, and what can the founder use of the fund? So can you give me an example of initial seed fund, how much do you put out, and does the founder actually take a salary from the fund, or how does it work?
Yeah, so the fund invests into the business and the fund are completely standalone, other than the fact that the fund owns equity within the company. In terms of the ability for a founder to essentially pay themselves, it depends. I guess you're certainly not going to get the same salary that you used to get in that 9-to-5 job, because really, as a founder, what you're doing is you're creating a lot of value or a lot of equity inside that business, and you're offsetting essentially cash burn in the form of your salary for the purposes of creating something much bigger and growing faster and hiring people and acquiring more customers and whatever it happens to be. In terms of what you can spend your money on, generally you'll have some form of business plan. The companies that we really invest in, we work through what does it what are the business dynamics to acquire a customer? What's the business dynamics to actually service that customer? What's your underlying costs associated with building the technology platform, maintaining that technology platform, setting up the IP protection, whatever it happens to be. But you encapsulate those in a plan. And as with essentially any project, you actually manage to that plan. And that's what you really communicate with your investors about. And I guess, and that's the expectations, I guess, that are set. So if you come back a month later and effectively have spent your money on something else, chances are it's not going to be a nice board meeting, or nor is it going to be a good and healthy relationship that you actually establish with your investor.
I guess you're not really always, you got to be able to be prepared to take that bet on yourself, I guess, what it is.
Absolutely.
You're not going to get the salary that you want, but you're just betting on yourself to achieve what you set out to achieve.
Yep.
Can I ask on that point though, let's say 1-to-1 cast or whatever, what are these, the way, look, I'm trying to go through this because I'm in the US next week. What are the, me talking to some angel guys that have got some decent funding, is they talk about a clear path to success, which is basically, once we get here, we've got these different milestones. Once we reach them, we can keep asking for more money. Is this pretty much how it works?
Yep. Yeah. So Series seed or seed investments, generally angel investments or investors will participate in those. You're talking about hundreds of thousands of dollars. Series A is when you're getting into the millions of dollars, and that's generally where you'll start to see venture capitalists start to play. And in terms of their expectations, is as you continue to take on more money, the expectations commensurately increase. Yeah. So that's I guess something. So when you're researching where to take money from, or that do you actually need money? Think about who the audience is that you're actually going to be pitching to. So if you're wanting to invest in digital media opportunity, make sure that the person that you're actually pitching to has an appetite for digital media or has a background in digital media. The earlier the stage of the money, the smarter the money that you want to find. So it's not just about the money, it's actually about what else they can provide for you. So that's certainly something that you should do your homework. Similarly, you should be practicing your pitch an enormous amount. Practice it on your wife, practice it on your husband, practice it on your kids, on your cat, on your workmates, anybody who'll listen and get feedback. Because the last thing you want to do is actually be sort of fronting up to the person that's your ideal investor and stumbling your way through.
So I think that's a good point. Doing your homework on the venture capital is a great point. As a typical example, can I just say that is it once I reach 100,000 users, or is it, and then I get some money once I reach 1 million users? What are these typical milestones that people can be putting into the business plan, or is it X amount of dollars in terms of turnover? Then once I get to this, what are some milestones that you would look for in terms of creating that path?
Yeah, I guess it depends upon what's the underlying business. So there's not a magic set of metrics which are perfect across any form of business. But in terms of being able to I guess secure seed investment, you need to be able to have some form of minimum viable product which you've actually put in the hands of real customers, so that you can demonstrate at least at I guess the initial stages, product market fit. So there's actually an open communication channel between you as a business with a product that's engaging with the market, and that there's feedback coming back in. Because it's only once you actually start to have that interaction that an investor can start to say, right, this is the value proposition. And similarly, if they're going to fund you, then you're going to say, that's the value proposition which you're actually going to build out the platform or the technology to actually run with. So to be able to demonstrate traction is absolutely critical. Somebody paying $1 for something is like 100 times better than somebody getting something for free and trying it once. So, if you can actually get somebody to pay you for something, then do it.
Australia has very generous tax advantages for research. Are any of your companies taking advantage of it?
Absolutely. Yeah. So the question was, or point was, that Australia has very impressive, tax incentives for research and development, such as the research and development tax incentive, and absolutely all our companies actually, if they are eligible, use that. And what that gives you as a business is up to 45 cents or 45% rebate. When you're in a tax loss position, which is pretty impressive. There is that type of thing which certainly exists to support the commercialisation of this intellectual property I spoke of earlier. But you need to understand what the limits are of those, and as you set up a business, you need to be conscious of how they actually scale.
I'll take one more question.
Thank you. Can you talk a bit about the split of equity that you'd expect? Like, for example, seed stage, you might take, 5-10%, second stage,
Yep.
and so forth.
Yeah, so basically you can expect, as a general rule of thumb, as a founder, that each time that you take on investment, that the incoming investor is going to want to get their hands on minimum 10%, so that's really quite low, and up to maybe 30% of the business. And it really just depends upon what the opportunity is at that point in time, and at each round. Obviously as a founder, you're wanting to make sure that each point along the way that the value in the business is growing. So it's not about the percentage that you own, it's about essentially the pie getting bigger. If you were taking on a seed investment for an angel, then they're going to probably want somewhere in the vicinity of, say, 10 to 20%, and they're probably going to want a board seat as well. And certainly if you bring in more sophisticated money, or say a venture capitalist who is investing not only their own money but other people's money, then they're definitely going to essentially want a board seat. And to make it interesting for them, they're going to want, once again, low side probably 15%, high side maybe 30 or more % of the business. Angel investors and venture capitalists generally don't want to get into a majority control position of your business. And there's a number of reasons as to why that is, but one of the key ones is you need to be motivated to stay within your business and give it the extra mile. You need to be incentivized to really create something special and to make that dent in the universe that Steve Jobs made so famous.
All right, I want everyone back on their feet again. And a big round of applause for Stuart tonight.
Thanks, mate. Pleasure.